Welcome to all you paid face group members who've landed on this presentation. My name's Scott Bell, and I'm your presenter today. I am a bookkeeper and business consultant, and I love tackling myths, as hopefully you know by now. And today we are going to be tackling another myth, although it doesn't seem like it has a lot to do with bookkeeping. It actually has pretty serious implications for it. So we'll take what seems to maybe be a little bit of a side trip and hopefully be able to dismantle another myth that potentially has quite an impact on our businesses. So that being said, the bookkeeping myth that we're dealing with on this one is that business structure doesn't really matter. We can just pick one. So before we do a whole lot of anything else, I get to throw a disclaimer out there right away, identifying to you guys that I am definitely not an attorney or a CPA. So anything that I'm sharing with you today is strictly educationally intended. Definitely only represents what I'm able to find in generally available, publicly available information, or that I have personal experience with, and that nothing about what I'm discussing today should be interpreted as being legal and or tax advice. Okay, now we can move on with all that being said. So this main myth is a doozy, much like the other one, almost as bad as saying that bookkeeping is cheap accounting. Business structure is one of the main determining factors in how you get taxed as a business, and sometimes how you get taxed personally, depending on what structure you're using. There are 5 business structures you can create for yourself. Those are sole proprietorship, corporation, partnership, limited liability company, and cooperative. 2 of those we're really not going to deal with because most small business owners and entrepreneurs really aren't in a place or even really considering what those encompass, and that's partnership and cooperative. So I'll just give a real brief description of them and then move on to the real meats and bones of it, the remaining 3. So cooperative, the least used structure, is a business structure that encompasses a group of individuals who own the company as a whole and are operating for their benefit. They can be incorporated or unincorporated, and this typically shows up with things like credit unions and utilities. So if you're a small business owner thinking of creating a credit union, this one would probably be one you would look at, and you can certainly reach out to me and we can discuss that later. But most business owners, you're not going to look at this. Likewise with partnership, it's another business structure that involves 2 or more people joining together in business. It's usually found in the white collar professions such as doctors, lawyers, that realm of work. And it typically includes a partnership contract or revolves around a partnership contract, which can be very difficult to write and execute. So that all being said, let's jump right into the very first one that we can start with, the easiest one to start with. And you guys will have to forgive me because I sat down and looked at all this. As I was starting to look at these different things, my brain went to song lyrics for some reason. So go ahead and sing it with me, everybody, all by myself, which is a good way to look at sole proprietorship. It's a starting point for a lot of businesses, and like the name implies, it's owned by one person, but it's the easiest form of business structure to set up. The challenge is that there are really no protections in this form of business. If any disaster with a client or customer occurs or happens, you can be sued literally for everything you have, whether it's related to the business or not. So a lot of people think that, as long as they keep their accounts separate or whatever, that, they limit it in some capacity, and that just is not true with sole proprietorship. The business is you are the business. Your liability in this form of business is unlimited. The main advantages, though, are that all the profits are yours free and clear minus your tax liabilities. And maintaining the form of business is relatively easy because you get to set the rules, whatever those rules might look like for you. Paperwork requirements are pretty much limited to what you need for tax purposes. And one good way of looking at where does this fit in the grand scheme of things, I like to relate these 3 forms of businesses we're looking at, these 3 business structures, to revenue as kind of good judgment point, because revenue ultimately is going to have an impact on your taxes at the end of the day, and that's really what we're trying to deal with these business structures. So a sole proprietorship is typically best suited for businesses with revenues somewhere between $50,000 and $75,000 annually. Once you start getting above 75,000, you're probably wanting to look at another business structure for a lot of tax deductions and stuff that start becoming available to you. The next one is limited liability company. I almost did it myself. There are a lot of people refer to it as corporation. It really is not. And the song that came to my mind as my wonderful Lovey put a note in here for me, let's get this party started, just kept going through my mind, because now things are really getting going for your business, or you've really got a really solid plan and you're excited and you just jump right in. And honestly, it is the most popular business structure out there by and large. It affords the owner the ability to protect their personal wealth and belongings. And it's the most adaptable of the forms of businesses, in that you can tax yourself, or you can choose to tax as sole proprietor, partnership, or corporation. Your personal income tax, though, typically is taxed at the self-employed rate for any income derived from an LLC, and in most instances, that's going to be approximately 40% of your income. The potential challenges with this structure, with this business type, is that you need to choose the tax structure, and depending on the state and how they work with the IRS, you could have struggles later on down the road if you need to change how you're taxing the company, how you're taxing your LLC, which would require planning meetings with the appropriate experts, your business attorney, your CPA, in order to identify where the roadblocks are and set the time structure the way it needs to be, so you can make that change without as many challenges down the road. You're a limited liability. It's part of the name. And one of the things that is a disadvantage, if you will, is that you've got to really pay attention to how you order your business as far as what you do with things. In order to receive that ability to limit the liability, you have to be able to separate yourself from the business in some real capacity. Most business owners accomplish this through the banking and credit accounts that they utilize for their business. So in that realm, you wind up keeping your personal banking and credit separate from your business banking and credit, so that nothing can happen bad on the backside. Too many tales that I've encountered personally from various past clients, that in making enough mistakes in that and crossing the two over, the courts allowed the liability to cross over into the personal, and they wound up having way more losses than what they would have. So should you make a mistake and mix the two, you utilize the bookkeeping to straighten it out so that the records are reflecting appropriately. Just keep in mind, uncaught mistakes in accounting and mixing the two can lead to personal liability later, as just touched on. And higher personal taxation, already noted potential issues with changing structure. So in a nutshell, those are the potential challenges that you're facing with LLC. Adaptability, though, is the key word with this structure, and why it's most often used. Regardless of when the decision might be made by you on using the structure, just know this structure has more variables than the others to consider, and really should only be settled on after appropriate discussions with legal or CPA consultation, to ensure that it's set up correctly all the way around for your particular business. As this structure is often used right from the start of business all the way up through God only knows what kind of revenues, I would recommend that a business owner has flexibility using it from roughly the 150,000 annual revenue through about 175, maybe 200,000 tops. And from that point, you're either looking at having to restructure the LLC in some capacity to take advantage of other deductions or tax benefits that might come your way for having increasing revenues, or you may have to look at the next structure that we're about to dive into. And that's corporations. And now we really get to get going, and, long from the days of having long flowing hair that I could sit here and bang my head around a little bit and burning down the house with you guys. Because once you start considering corporations or corporate status, your revenues are really jumping. You're really pushing high productivity, high sales. You've really arrived, basically. This structure is utilized mostly in the S Corp function for small business owners and entrepreneurs, and that particular structure, S Corp structure, is gaining more and more ground over the last few years in popularity with business owners. It allows you all the benefits of corporate status without the double taxation that usually accompanies the B and C corporate entities, the ones that we're typically familiar with, the big boys that have 500 plus employees and fleet of attorneys and cars and you name it. This structure is typically used as pass-through mechanism, and thankfully the IRS and the government allowed for a structure like this to come into the picture, which you'll kind of see here in a second. But pass-through mechanism basically means that the revenues, losses, deductions, credits, anything that goes on with the business passes through to the shareholders, and in most instances, S corporation is held by one person. The nice thing, though, is because it's a corporation, you actually can issue stock to raise revenue. Just keep in mind that the stock is considered private stock, which can be an issue with some investors. The best advantage of them all, and it's why it's gaining popularity, is that in this structure, you are allowed to pay yourself a reasonable salary for the year and then take whatever leftover profits, revenues are sitting there at the end of the year as an owner draw. And as long as your salary is deemed reasonable by the taxing authorities, you're only taxed on the salary that you took, not on the draw at the end of the year. So major advantage right there. The typical disadvantage is just needing to follow the rules for corporations, such as having business meetings, real business meetings, assigning people to key roles like treasurer, secretary, that kind of thing, and having notes, business meetings, of your business meetings, business minutes, should anyone question the fact of whether you're truly a corporation or not. Is it just a show, or what are you doing here? This structure typically should start coming into the picture around that 175, 200,000 mark, because again, the benefits and what you get out of it from tax deductions. But to me personally, it really is all about that owner draw prospect, paying yourself what you're worth and having that ability to take that money at the end of the year if you want to. You can leave it in the company as retained earnings if you want to. But it's definitely something to consider as your profits and your revenues go up. So one of the things that came across as I was kind of looking into this myth a little bit more was landing on a quote about making choices, making decisions, because this is a very important choice to make, obviously. And I landed on one that identified in decision making, it's not about making the right choice, it's about making a choice and making it right. And I think that speaks so well to what we as small business owners really need to be dealing with, in that we're not going to necessarily make the right decision all the time. We're just doing too much on any given day. But what we get to do is make other decisions that make what we're doing right. And that's what we're doing here. So in doing that, we're again coming to an area where we can ask good questions in order to know what we need to be doing here. So when you're dealing with the business attorney, when you're dealing with the CPA, ask these few questions here, because this is what's going to get you on to what the needed and necessary business structure for you is. Ask them about what the three structures tax rates are in your particular state, and what are the most likely benefits for your business for each type of business structure based on that. Ask them if there are any special requirements for establishing any of the three business structures. This usually comes at the state level, but there could be federal requirements too, depending on the business type. And then ask them about what kind of issues may come up around transition from one structure to the next in your particular state. Are there specific things you need to worry about, keep in mind, plan for in advance? Those three questions will actually get you way further towards figuring out what business structure to hang your hat on at the end of the day. So that all being said, the decision on business structure, at least in having a good starting point for looking to one versus another, can truly be looked at initially from a revenue standpoint as a good guideline. The 50 to 75,000 mark, the 100, 150-ish mark, and 175, 200 grand and up, along with the advantages and disadvantages that we discussed here today. Consulting with people like myself, attorneys and CPAs, all having a place in helping you try and make that decision. those kinds of consultations shouldn't be overlooked at the end of the day, and they should be engaged in because the decision is that important. So hopefully we've done a good job in trying to help you with dismantling this myth and looking at business structure a little bit more seriously for yourself. Please feel free to leave comments about this video and topic in the thread where the video shows up. This will help me, like the other presenters, to keep up with the conversations with you guys. Also, please like the thread of this presentation if this presentation was helpful, so that we can continue creating content that serves you on your journey. If you'd like more information or would like to ask other questions related to bookkeeping and finance and business consulting, please feel free to visit my website and set up an appointment. And I can't express to you guys how much I enjoy spending time with you guys, and hope to see you guys in group soon.